Are you a retiree, maybe a pre-retiree, or maybe just a young person who just got a policy? And you're wondering, how long do I need to keep this thing? Am I going to keep it for 20, 30, 40, 50 years? Am I going to keep this during retirement? If you have any of those questions, this video is for you, because today we're going to talk about retirees and do they need life insurance during retirement. Now, before we get into that, I always tell people you don't need life insurance, but you may want to consider getting life insurance. We're going to start off first with reasons why you may not need life insurance. No, you may have life insurance, no, but when you got life insurance, you had mortgages, you had certain taxes that you know you would have to pay if you passed away, or maybe you had kids, or you just are worried about an individual who you had to take care of. So that may have all changed, and if it has changed, then you may not need it anymore. Or maybe you have built up enough assets or built up enough savings that if you were supposed to die, all of that will be taken care of. In those circumstances, you may not need life insurance. Now, the best way to find this out is to speak with an expert who could do a needs analysis, a financial planner or insurance agent, or somebody who's an expert who could do a needs analysis, a thorough needs analysis, to determine if you need it or not. Second reason why you may not need life insurance anymore is because it may be cost prohibitive. Too much money. So you may have bought, for example, this term policy and it's now up for renewal, and when you had it 25 or 30 or 20 years ago, and when you purchased it was at a certain price. Now it's going to be renewed and it's going to be significantly higher. If it's too costly, you may want to consider getting rid of it. If it's just something you cannot afford, you may be in that space, or you may want to consider lowering the amount. But again, before you do that, you want to sit with an expert so you're well aware of the decision you're about to make. So, if you're in either one of those circumstances where you're thinking about canceling a policy or lowering the policy, you may want to consider speaking with a professional who has knowledge about charitable giving, because you could potentially donate that policy. And if you donate that policy, sometimes the charity would actually take over payments, right? And another benefit is, depending on the value of the policy, if it has value, one way you're going to find that out is if you go to the process. If that policy has value, you may be able to get a tax deduction then and there. Or, you donate the policy to a charity. Charity is the owner and the beneficiary, and you're making payments. You get tax deductions on those payments. So before you go canceling your policy, just pump your brakes for a second, have some conversations, because you may be able to help out the charity, and in the process, you could get some benefits from a tax standpoint. Now let's look at some reasons why you may want to get life insurance if you're a retiree. Estate planning is the big one. So for some individuals, they say, if something were to happen to me, I want this money to go to my kids, my grandkids, or this individual who's helped me, or someone who you want to take care of, or maybe a charity. The beautiful thing is that it's tax-free. That is, the beneficiary receives a tax-free death benefit. Another thing is, you may want to leave a legacy to your family members, but depending on the assets you have, there may be tax ramifications. But with a life insurance, you bypass probate. It goes directly to the individual. Another one is, you may have these assets and you've had them for a long time, say a second property, or maybe non-registered funds, and you've had them and you have built-in capital gains. And if you were to pass away today, what would happen? You'd have to pay that capital gain. And you want all of that amount, the asset value, to go to the beneficiary. Well, what you could do is get a life insurance policy, have that pay out to the estate, and have the estate pay those taxes, because again, when you die, it's considered a deemed disposition, and it's considered a deemed disposition just before death. It's almost as if you sold everything before you die, and all the built-in gain has to be paid. The next one is equalization of inheritances, right? You see this often in business, but it could show up in other places. And so, for example, if you have two kids, one works in a business and the other doesn't. The one who works in a business, you want to leave the business to that individual. But the other child, you may say, yes, I want to give something that's equivalent, and I don't have any other assets that really could, would make sense. Well, life insurance could be the thing that fills in that gap. And that's just the equalized inheritance, where you have certain assets of a certain value, and you want to make sure that one of your children, it could even be your grandkids or even cousins or whoever. You want to equalize that inheritance. Life insurance is a precise way to do that because you leave that amount, and again, there's a tax-free benefit that goes to the beneficiary. The last one is protecting retirement accounts. A lot of people don't realize that RIFs and RRSPs, when you die, it's treated as if you earned ordinary income. So, for example, you purchase this policy because you have 600,000 in RRSPs. Well, it's as if you earned ordinary income of 600,000 for that year, right? You're going to be taxed at approximately 53.53%. Well, you had hopes that that entire amount from an RSP standpoint would have gone to the kids. Well, again, here's what you could do is get life insurance, have it pay out to the estate handle the taxes, and depending on your health and what you qualify for, it may be a more affordable option versus trying to leave a huge amount in retirement funds. Life insurance could make up that difference. Next one is income replacement. If there's someone you're taking care of, could it be your older folks and you're worried about, okay, you know what, I'm alive, I'm retired, but my parents, with longevity these days, it happens all the time. I'm retired and my parents are retired, but if I was supposed to pass, my parents wouldn't be taken care of. Or you have a disabled relative or a child, grandchild, whatever the circumstances are. If somebody relies on you for financial security, you may want to consider getting life insurance even though you're in retirement, because if you were not here, that person would have financial challenges. The next one is funeral costs, right? You might say, you know what, everything's taken care of, but the one thing that potentially could be a burden is the funeral expense. I want to at least have that taken care of. That's another reason why you might want to get life insurance for final expense, to cover funeral expenses, burial, things of that sort. Next one is we kind of talked about it and topped it a little bit, and it's the legacy and charitable giving aspect of it. All your beneficiaries and immediate families and friends are taken care of, but you may want to see a charity continue on because they supported you or they helped a family member, or you could just love their mission and what they stand for. And what you could do is, you could use funds that you have, purchase a life insurance policy that goes towards a charity. Again, there are many tax benefits for that. And I probably will do a video just talking about charitable giving as we get closer to the year. But there's definitely opportunities there, and you want to consider that. Debt coverage. We see this for especially folks who have second, third, fourth, fifth properties. There's mortgages there, and if you want to have those assets pass to your beneficiaries, and you don't want them to deal with the debt, or you might have liquidity issues, a good way to do that is simply this: buy life insurance policy, have it go to the estate, and then when that money comes to the estate takes the funds from the life insurance and pay off all the debt, right? That way, the assets pass unencumbered, and the individuals who are supposed to be beneficiaries will receive this. Again, hopefully this was helpful. I didn't go through an exhaustive list, but this is actually based on conversations I've been having with a client, which is how I usually create these videos. And, I just touched on a few things. If you have additional questions, you could drop it in the chat. Reach out to me. We could talk. And for now, like, share, subscribe. All the best.